Hi everyone, welcome to this live video show. As usual, I will share with you my view on the markets and on fundamentals for the week. And of course, the short term, low volume, ultra thin week. So, not much to say actually, but we are going to take a look at some things that I do believe are interesting to comment today. So, here we go, starting with the macroeconomic calendar. As you can see, we have holidays extending everywhere, even today, which is Tuesday, right? Uh, in the fundamental front and on news already released, I was taking a look at Japanese inflation figures. We have Tokyo December inflation, national November inflation, right? Both numbers are well past the September decision from Kuroda to uh, incline, sorry, their easing program into the curbing the yields, yeah, closer to zero than rather than anything else. The fact is that inflation came in mixed, little, showing little signs of life. I mean, we have been doing visiting Japan, Bank of Japan, of course, sorry, for 3 years already. And for so far, no, there's no signs that inflation will pick up, neither grow. Most of the yen weakness we have seen lately would probably help Japan, but that yen weakness is due to dollar strength on hopes Trump policies will bring a boost to growth and inflation in the U.S. and hopes that the Fed would have to fasten the pace of rate hikes right next year. So actually, it's not that the economic policy or the monetary policy, better say, that Japan is applying what's working, but uh, getting a helping hand from the U.S. So actually, not really good numbers, but not enough, not that bad to put the yen on demand as the market is still focused on the greenback. Sorry, I'm a bit roasted after a long weekend and I need to start up again. Anyway, sorry. For the macroeconomic calendar and later on today, I believe that the only relevant, really, the most relevant one will be the consumer confidence index in the US for December. Is expected to uptick given the Michigan index we had last Friday and all the signs we're getting from the US economy. It's clear that confidence in the country is growing. So actually, I'm not expecting a disappointing number, but for the time being, I'm not sure if positive figure will be enough to take the market out of its current ranges, right? Anyway, moving on into the calendar, maybe pending home sales in the US will be able to affect a bit the market on Wednesday. But actually, if you take a look and considering the ongoing conditions due to winter holidays, there's little else we can expect this week in the macroeconomic front. However, there's one thing that I found out pretty interesting to comment today. So let me share my charts with you to show you what happened overnight with gold prices, right? Uh, Gold has been trading within $5-6 a day lately due to change market conditions, of course. And all of a sudden, today we have an almost $20 spike from 32 to the 50 region, and the price retreating half of those gains and settling around 1142, right? Uh, that big movement that barely lasts a couple of hours. It's usually normal in this time of the year, and it's triggered by physical demand, right? Physical demand of gold in this particular case coming from Indian jewelers that triggers such huge move in a short time space, right? And all of a sudden we get back into the range and moving nothing. This is quite usual in the market this time of the year. It can happen everywhere and anywhere with any major currency pair. And majors are moving today within 20-30 pips range, not really showing much of reaction. Uh, But this kind of movements can take place also in any cross. So I highly recommend everyone to use smaller than usual positions if you really want to trade these days. Although the best advice I can give you these days is to stay away from your trading platforms because it's hardly possible to see really technical directional moves intraday speaking, right? Anyway, I was taking a look at the euro yesterday. This is the daily chart. Take a look at what's going on today. Really nothing. Uh, and there's nothing that's going on. It's helping the momentum indicator to correct in the daily chart, but overall bearish risk remains intact, particularly because the pair has been settling most of this last week and also today below the 460 level, which was uh, 2015 yearly low, right? We are trading at levels last seen in January 2003, like almost 14 years ago. So the risk in the longer run, it's still inclined towards downside. As I said, the dollar is strong because of hopes of sentiment, not actually strong by any other mean at this time being, right? We all believe, well, the market believes, uh, Donald Trump policies will bring health, growth, inflation, and of course the Fed with its dot plot and the three rate hikes for next year added to that positive sentiment towards the greenback. However, it's still to be seen if that is going to happen. I would say that the market will give Trump and the Fed the first quarter of 2017. You know what I mean? During the first quarter of next year, the market will probably maintain its positive view on the greenback, mostly if macroeconomic data comes along with those hopes of growth, right? If we have positive figures, then it most likely will be see the greenback holding its strength. Uh, I do still believe that the euro has chances to go up down to parity at something quite heavy if you told me. But anyway, it's still possible, particularly if we get down below this year low around 350. My next support afterwards, and I'm not talking about this weekend, but about upcoming January, will probably be 206, which is July 2002 monthly high. And if somehow the price breaks below the 200 level, then there's a good chance that the market will try to push it lower and test parity. Okay. Uh, and to the upside, upward corrective movements of up to 600 or so will hardly affect the trend. And in fact, I'm thinking more of the 840 region, right? Which was around here, okay? Which was the base for, let me change to the weekly, right? The pair has bounced from that level multiple times between April 2015 and, of course, this November when it finally broke lower. So almost a year and a half with the lever providing a major static support. We had, of course, break below it, but we quickly reverted. Overall, I do believe that that's the line in the sand, right? The pair will maintain its bearish stance. There's no chances of talking about it. Bullish euro as long as the price remains below that level. Always remember there are no trend that goes straight. We have always correction in the middle. The movement after the US elections in November and until now has been quite straight when it's about buying the greenback. And during the past 2 days, 2 weeks, sorry, we have some consolidation and the pace of dollar buying decelerating, but not stopping, not reverting, right? So beware of an upward corrective movement these days. So take into account that 840 the 800 area, 840 is the line in the sun for any kind of euro strength, right? And when it comes to the pound, also going to the daily, sorry guys, there's not much to analyze below that level. Take a look at the chart. We have been down for 3 weeks in a row in here. It has, as I said, the pace of the decline has been less strong over the past few days, right? But the pair has erased all of those gains we had mid-November when there were hopes that we will have a softer Brexit, right? We are back fearing the UK will be forced to a hard Brexit by the euro area, the rest of the euro area members. And that's what keeping risk toward downside in here, particularly after first Scottish Firms Minister Nicholas Sturgeon uh, ask for special conditions, right, for Scotland if, in the case, the UK leaves the single market, and the request was denied by Jorge Toledo, which is a Spaniard minister, right? And the market understood at that particular moment last week that it just take one single euro area member to vote against the UK holding into the single market to reject any negotiation. Yeah, so beware of that. Beware of that because if the UK can't manage to remain within the euro area single market, a break below 120 seems more than likely. Right now, I'm looking at those lows we had late October around 2088, 2019, right? This low. So that's the level I'm looking for right now as a probable bearish target as long as the price remains the immediate light in the sun for me is 2330 because if you take a look at this region you will notice that the pair has stalled in around it multiple times ever before breaking higher and once it broke higher to downside. So it's just the key resistance level, okay, 2330 region. As long as below it, I will favor the downside. Above it, I'm not. I would like to see a clear break and advance beyond 125 to talk about further upward moves, okay? Um, and another one that seems interesting is the daily chart is the dollar Japanese yen because take a look, the price is developing within a small wedge, right? And that's usually continuation figure, right? It's taking a rest in the middle of a bullish trend. So the figure itself, as long as it holds, right, is telling us that there's a good chance the pair will break towards the upside and make another interesting rally, huge rally that will target levels beyond 120. That's something you had to be thinking, guys. I would like to see the pair, of course, breaking above the wedge, but breaking above this high around 1866. Talk about an upward continuation. I guess 120. No, I guess no. I believe 120 is the next bullish target, and that there's a good chance that the pair can go up to 125, 125. Yes, on a steady gain beyond that 120 level, particularly if the market remains confident in the greenback and in our friend Donald Trump. Okay, and towards downside, this the low of a figure around 1655 or so. It's the main support to watch during the upcoming days. It has held above the level multiple times. If you take a look at bigger time frames and older and historical data, you will see that around 1660 the pair has also multiple highs and lows daily and weekly basis. So that's the level to break, probably not. And when I said a break, I mean not in a day like this one, when we have nothing of volume and we have those white spikes here and there, right? More referring to next week, and when the market resumes activity a bit more uh, interesting. Anyway, this is the level to watch. Below that level, the pair can correct lower, but I won't be concerned about the bullish trend unless the price breaks below 14, right? Until 114, I do believe the movement will be understood as corrective, and there's a good chance that buyers will come back around this level. Okay, this is the level to watch in the dollar Japanese yen in the case of a downward corrective move. And when it comes to the OC, I will bring up my weekly chart because if you take a look, this is the rally the pair made in between January, right, and April this year. It was a quite impressive 1,000 pips rally, right? And ever since rallying that, we had a correction down to the 61.8% retracement, and then multiple months trading in between Fibonacci levels, but holding above the 38.2. Now that it broke, it's back to lows. Um, there's a low in here at 71.44. Last Friday lows was at 71.59. So the fact is that the pair tested that lows, but didn't break it. We have the Fibonacci around 72.10. So I will be looking right for a break below 71.40 to confirm further slides in the pair, probably towards the 71 area, but more likely about uh, down to 17. Okay, and that's one. Okay, sorry, someone's there. I got a notification that someone's asking about the pound Swiss franc. I have to be honest, I don't follow that pair. I don't even have the chart, but I will prepare it for the next one, the next week. Okay, live coverage, and we can discuss about it. Okay. Anyway, remember what I commented about gold and what could happen these days. Beware of that. And when it comes to oil prices, what is interesting in here, what's really interesting is that that last week pullback held above 52, also a major resistance level. If you take a look at your charts, you will notice that the commodity has been holding above that, below that level, sorry, for most of the second half of this year, unable to regain that level, and all of a sudden we broke above it, with hopes that the OPEC will cut its output. Uh, well, they promised to start cutting output next January, right? And January is around the corner, so upcoming movements will depend on how much oil production we have from OPEC and non-OPEC countries, not considering the US, of course. Okay, US data will be little relevant for the first month of the year. The market will focus more in what's going on in in Saudi Arabia, all the Asian oil producers, right? And if the output actually comes down, there's a good chance that the commodity will break above these highs in the 55 region. Although I do believe that 60, okay, will be uh, tops for the movement. The market is still oversupplied. The US will probably boost its oil production. We have the Baker Hughes recounts a weekly basis, showing us that more and more rigs are put into work in the US. We are just 13 rigs short of the SDR max. So keep that in mind when going to trade oil, right? More gains, yeah, likely. Beyond 60, not so much, okay? And finally, I will take a look at gold. Today's movement has broken, and the price has broken above this short-term descendant channel I was following the daily chart, but still the commodity is far from bullish, right? And I do believe that the risk remains towards downside. More physical demand coming from India during these days and ahead of the holidays can push it further higher, but as long as below 1180, which is the 61.8% retracement of this year rally, it seems unlikely that gold will turn bullish, right? The risk in here is towards downside, but as I mentioned multiple times in previous uh, coverages, we're getting too close to production cost, and therefore the decline will lose pace at this 1150 region, right? 1040, I do believe that's the lowest we had last year, and that's the probable bearish target in the case of further slumps. Some ultra positive news coming from the US can push it to 1000, but I don't expect anything below that level. Okay. 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 Someone's asking if I trade supply and demand. Of course, all the market it's about supply and demand. Resistance and supports are about supply and demand. So, and that's actually what we are trading. Not sure if I'm answering your question as you said, but yeah, we all do trade supply and demand. Okay. Anyway, nothing much to add today, guys. Sorry, but there's not much going on in the market. Thank you for sharing these minutes with me, and hopefully not sure next week, but the next one it will probably be much more interesting for intraday traders like me. And so see you then. Okay, thank you, and bye bye.